In this video, I'm going to show you 5 simple and successful ways to invest in real estate. Now, this is everything from buying income producing property to REITs to crowdfunding and much more. I'm going to truthfully show you each investment category, and then I'm going to give you the pros and the cons with each one. Now, if you're good with that, give me a thumbs up. Now, if this is your first time here on this channel, you're going to enjoy over 1,000 super helpful videos here, so hit that bell. If you already didn't know this, guys, the internet is full of a lot of BS, and I'm going to tell you what you may not want to hear, but it's going to be the truth. And I can personally tell you that I've been buying and owning real estate as an investment strategy. It can be very satisfying and very lucrative. And I've been investing for the last 36 years, whether the economy was up or whether the economy was down. My real estate investments continue to still make money. Unlike the stock market and bond market, investors and real estate owners can use leverage to buy property, pay just a portion of the total cost up front, then pay off the balance plus interest over time. Now, traditional property investments generally have a mortgage that's requiring 20 to 25% down payment, but in some cases, a 5% down payment is all it takes to purchase an entire property. So this ability to control the asset at the very moment that papers are signed emboldens both real estate flippers, long-term landlords, and even vacation rental property owners. Now, I just want to tell you that I have seen property owners who've used all kinds of leverage. Some have even taken out second mortgages on their homes in order to make a down payment on an additional property, all while collecting income at the same time. Now, I've also seen small investors who have bought a cheap property, but over time, they parlayed their investment income back into real estate. And some of them I even know are owning a penthouse in the building, and they started off with a small efficiency condo. So I want to dive into this, and I want to give you the 5 simple ways to invest in real estate if you're good with that. The number one way is rental properties. You probably already know this. This is the traditional and the way that most investors use. Owning rental properties can be a great opportunity for individuals, especially if you've got some do-it-yourself renovation skills, DIY, right? But it does take patience to manage tenants. Now, there are pros and cons to buying real estate. However, this strategy does require substantial financial upfront. You got to finance it. And there's additional maintenance costs. I want to tell you about me. I bought my first rental property when I was 21, and I've learned a lot since then. I learned a lot of what to do, what to look for, and what to stay away from. But I can tell you on that first property, I overpaid for that property. I had a 13% mortgage on that property, and people complain nowadays, right? But I'm so glad that I started buying back then, and I'm glad that I bought. And why? Because it has gotten me to the point of where I am today. And this same thing can happen to you, and this is why I'm doing these videos for you. Here's the pros and cons. The pros to regular real estate investing is it provides regular income. The properties can appreciate. It maximizes your leverage. There are many tax-deductible expenses that are associated with that. You can take off on your taxes. And tenants can ultimately pay for your investment. But there are cons, okay? Managing tenants can be tedious. And look, potential damage to properties from tenants. And reduced income from potential vacancies. But I want to give you the information. I want to give you the truth. According to the U.S. Census Bureau, the sales price of new homes, this is a rough indicator of where real estate values are, consistently increased in values from the 1960s to 2006, before dipping during the mortgage lending crises. Now, of course, you know that prices have resumed, and obviously you know where prices are today, but even surpassing pre-mortgage crisis levels. So the long-term effects of the coronavirus and the long-term effects of investing on real estate values is where it is. Just take a look at where things have been and look at where things are going. I have one other video here on this channel that I talk about what I personally like to invest in. So when this is over, you can go ahead and check that out. The number 2 way that to invest in real estate is real estate investing groups. These are REIGs. Now, these are real estate groups that are ideal for people who want to own real estate, but they don't want the hassles of actually managing and running it, right? So investing in REIGs require the capital, the money, okay, to access to financing. But REIGs are like small mutual funds. Do you know what a mutual fund is? It's where you pull together, invest in real estate properties. And the typical real estate investment group is a company that buys like apartment buildings or blocks of condos and then allows investors to purchase into the company. And this gives the group the income and their base. But a single investor can own one or multiple units of self-contained living space. Now, what this means is the company is operating the investment group, collectively manages all the units, handling all the maintenance, the advertising, the vacancies, the interviewing of tenants, and that sort of thing. But in exchange for conducting these management tasks, the company takes a percentage of the money for rent, from the monthly rent. So the standard investment group has a lease in the investor's name, and then all the units pull their money in to rent, and then it can also give you some additional income on a steady basis. Now, as long as the vacancy rate is on these pooled units does not spike too high, there's usually enough to cover the cost. But there's pros and cons. Here's the pros and cons. It's more hands-off than owning rentals directly. It provides income and appreciation. But the cons are there's vacancy risk because you're pulling with a bunch of other people. You're not in control. The fees are similar to those with like mutual funds. And the thing that you got to really watch out for is unscrupulous managers because, again, you're not in control of that situation. Now, here's the number 3 way to make money in real estate. House flipping. Now, you've heard this, but house flipping is for people with experience. I wouldn't suggest to jump into this first. But if you have experience in valuation of real estate and in marketing and in renovation, then house flipping can be good for you. But it requires, again, the money and the ability to manage or oversee the repairs that are needed on the property. Now, this is what I would consider to be the wild side of real estate investing. It's not traditional real estate investing. It's like day trading, right? It's different than the buy and long-term hold investors. You know, real estate flippers are different from the buy and rent landlords. And the case in point is real estate flippers often look to profitability to sell an undervalued property and quickly. You know, you want to do it within, 3 to 6 months. But there's 2 kinds of flippers. There's a wholesale flipper, which is a pure property flipper. They don't even do anything to improve the property. Okay, they buy it and they sell it to someone else, and someone else will deal with it or probably fix it up. Now, this investment, the investor has to see some kind of a serious value in order to turn a profit without doing anything, no money in, not any extra adjustments or improvements. But flippers who can't quickly turn that property, here's the problem, that find themselves in trouble sometimes, okay? And typically, a flipper doesn't have a whole lot of cash on hand, so they can't pay the mortgage over long term, and it's not geared for that at all. There may not even be any rental income. So this can lead to problems and snowballed losses. But then there's the other end of that is the buy, renovate, and then flip. This is the traditional kind of a flipper who makes money by buying a cheap property, right? Fixing it up, renovating it, making it look better than it was. And usually flippers can only do 1 or 2 of these at a time because it's cash and labor intensive. Now, there are pros and cons. Here's the pros and cons. You're going to tie up money for a short time period. It can offer a quick return, but there's cons. You got to know the market. You got to know what's going on. You got to know the neighborhood. You got to know the properties. And when a real estate market is hot and it cools off unexpectedly, you can get burned. And this tends to be more like a job, more than an investment. It's a short-term investment. So there's another way to do this and to invest in real estate, and that's number 4, in a real estate investment trust, or they call it a REITs, okay? This is a trust, And this is really good for investors who want a portfolio exposure to real estate without the traditional real estate transaction. Now, this is created by a corporation or a trust that uses investors' money, okay, again, pooling money, to purchase an income-producing properties. Notice the word income-producing properties. REITs are bought and sold on major stock exchanges or exchanges. It's like a stock. Corporations must pay out 90% of the taxable profits. This is a dividend to the owners, okay? In order to maintain that status, this is the way they have to run them. But by doing this and avoiding corporate income taxes, which a regular company would do, they pass it on to the investors. And this is taxed as profits. So when you get a check, it's taxed to you. Now, whether or not you tax it or not, it's a dividend. So like regular dividend stocks, investment for stock market investors, it's a regular income. And this is not in comparison to regular real estate investments, like the first thing that I had mentioned. Potential investors really got to pay attention, though, because there's a difference between owning buildings and receiving the finance income from these. Okay, it's a mortgage-backed security is another way that people will invest in real estate. It's like a mortgage. It's a mutual fund that people will lend out money to others. Now, a lot of times these can be risky because they may not necessarily have been able to get mortgages on the open market. So just watch out for that. Here's the pros and cons. It's like a dividend-paying stock. The core holdings tend to be long-term, okay, because they're getting leases, they're renting properties out and they're getting. But the cons of this is leverage is not with traditional real estate. You know, traditional real estate, as I said, you can put down a certain amount of money, you control the asset, and it can be worth a lot more. In this case, you got to put that money out. So whatever it is what you're getting as far as the, and then there's tax advantages that you may not be able to get with this because it is not like the traditional real estate where you own, rent, buy, and manage. Okay, so your tax advantages are not the same. The number 5 way to invest in real estate is there's a platform called an online real estate platform. And for those who want to join this, it's like an investing into bigger commercial or residential deals. Now, again, this one is an investment that's made online into real estate platforms, but it's like crowdfunding, if you can think about that. You know, this requires large chunks of money, although, you know, it's not like you're going to purchase the whole property outright, but you're pooling again together with others. There are pros and cons to this. You know, you can invest in a single property or a project or a portfolio of projects, and you can also diversify your real estate investments. Let's say you own real estate in some certain area and you want to geographically move to another area with investments. There are cons to this. These don't tend to be liquid at all. You know, you're going to get your money locked up for periods of time, and there are management fees. The big question is why should you add real estate at all if you've been thinking about it? You know, just go buy stocks, go do other things, put your money in the bank. Okay? Real estate, the advantages, is an asset that many experts will agree should be part of a well-diversified portfolio. Not just one part of it, but a diversified portfolio. Why? Because real estate does not usually correspond or correlate with stocks, bonds, or commodities. It kind of runs a different stretch. Real estate investments can produce income from the rents or mortgage, and it also has additional potential for capital gains and growth. Now, full ownership has many tax advantages, as I said. But what's the difference between a direct owning property and indirect owning a property? You know, direct real estate investing and indirect real estate investing. Now, direct real estate investing involves owning and managing the properties, or you hire a property manager. Indirect real estate involves investing in pooled groups, crowdfunding, REITs, like I just had mentioned. Now, is real estate crowdfunding risky? Well, I would say so, in my opinion, yes. Compared to other forms of real estate investing, crowdfunding can be somewhat riskier, and because you don't physically know what is involved in the project. It may appear on a crowdfunding site, but that's only because they were unable to source financing from a traditional bank or whatever, right? So in many real estate crowdfunding platforms require investors' money to be locked up for several years. So here's the bottom line. Whether real estate investors use their properties to generate rental income or wait for the perfect time to sell the when your property goes up and you want to cash out, you can do it that way. But there's a profit and potential within real estate, whether the market is up or whether the market is down. Now, I just want to tell you this. As I said, I've been investing in real estate for 36 years. The reason I do these videos is for you. I want you to understand that this can be very lucrative business for you, or a side hustle, or if you're looking for other avenues to get ahead in life. Now, if you're still here and you're watching, give you a thumbs up. I appreciate you. And the reason I'm saying this is because the others who turned off this video already, or the others who are watching Henny Penny, the Sky is Falling, or The Boy Who Cried Wolf, that's all the negative. As I said, I have bought when the market was down. I overpaid for the properties. I paid high interest rates. And guess what? Tenants paid those properties off. The long term of it is you will be very happy long-term real estate investing when someone's paying for your properties, when someone is doing this on your behalf, and later in life, you're going to thank your future self. In other words, you're going to look back and say, man, I am glad I did it when I did. So if this is you, congratulations. I hope you're successful. I wish you well. Yes, there are a lot of problems, a lot of issues. As again, I used to have hair, but I can tell you this, again, it's all about long-term. Don't look short-term. Don't try to buy and flip. This is my personal investment strategy. I like long-term investments. I like the income. It's where most people, if you look throughout the United States, most people who have money have invested and made their money with real estate, or are holding their assets, holding their money in real estate. It's one of the easiest ways the simple common person can go ahead and get ahead in life because it's leveraged. Is timing important? Yes. Is the right property important? Yes. Am I saying buy? No. I am saying to be very careful, do your due diligence, use your head, understand the numbers, understand the market, look at the growth, look at projections. And I'm not an attorney, I'm not a mortgage lender, and I'm not an accountant. Okay, so again, do your research. I can tell you my real estate team has helped thousands of people. And if it's something you just want to chat about, just pick up the phone, give us a call, because this is what we do every day. We're here in Myrtle Beach, South Carolina. Wherever you are, I hope you are having a fantastic day. It's Jerry with Jerry Pinkas Real Estate Experts. As again, I hope you enjoy these videos. I appreciate you, and I'll see you in the next video. Take care, guys.